Ladies and gentlemen, this is Peter Miner from Ropita Consulting Inc. And today I want to bring to your attention something called the special fund. Special fund. I know in the US and other developed markets they call it the mutual funds, but in the Kenyan market we refer to it as special fund, and it is relatively new in Kenya because the oldest special fund in Kenya has been in existence for around 6 years, which is actually Mansa X by Standard Investment Bank. There are others like the Oak Special Fund and other special fund that we are going to look at today. So this was a training that I organized for people who are interested in understanding other avenues of investing other than just the real estate and fixed deposit and treasury and even investing in circles. So what is the objective of this training? The objective of this training is to help grow your money at minimum risk. If you have that kind of a goal in life that you want to grow your money at the minimum risk, investing in safe havens, then this is for you. And that is basically the essence of this training. And the second goal is to have access to liquid cash as and when in need. You know, there are places where you invest your money and you don't have access to it when you need it, like in a SACCO. I am a member of a SACCO. I have been saving in a SACCO for a long time, but you can only access your money if you want it in form of loans or if you want to withdraw everything. But for you to get a little share of your money to withdraw from the SACCO, it's virtually impossible. And when you retire or you cease from working, you experience a lot of difficulty getting your money and even accessing loans facilities. So the special fund provides you with an opportunity to invest in something that does not tie up your money. You have access to liquid cash as and when you need it. The third goal is to get a higher than average return from your funds. If you're careful and keen and you understand how inflation works, if you invest, for instance, in you deposit your money in a fixed account where you're earning 8% interest. If you do the maths right, you realize that 8% is very close to the rate of inflation. So by the end of the day, you don't earn much. So we want to invest in a platform or in an avenue that generates more return than the rate of inflation in a country. So and then who are we targeting in this training? So the scope or this training works for you if you are in any of these particular classes. You're running a business with extra liquidity, like you have you realize that your business only need $1 million in form of liquidity, but you have more than that, so you can invest the extra. And the good thing is you have access to it when you need it anyway. Then it is also for short-term investors who need to invest now and have access to their fund maybe soon. Like, let's say you have a project that you want to do in 1 year's time and you have the money right now. So the special fund is the best avenue for you to safely invest your money for that duration of time between now and when you want to do your project. And then for retirees who are looking to get a regular income, probably quarterly or even monthly, there is an arrangement that can offer you monthly returns if you invest well with a good financial advisor like myself. Of course, I'm one of the advisors in this area, what you call the independent financial advisor. Then there's also what you call the high net worth individuals looking for alternative investment to rental and fixed deposits. Like, you learn that some of the investors in special funds are the largest entities, people who are well loaded and looking for an avenue to just make money passively. Why am I doing this training? I want to introduce my company, that is Ropita Consulting Inc., which is fully owned associate company of Ropita Limited, a company that I registered about 7 years ago in 2017, 8 now. So the consulting entity was created to deliver the following services, and that is financial advisory, taxation, accounting services, strategic planning, and corporate training. So I'm not being paid by anyone to do this training. I'm not hired, but I'm doing it because I'm a consultant in the area of finance, and I would want you to refer clients to me, or even yourself to become my client if you need any of these services that I have listed right there. So special fund, I want us first of all to start by understanding what is special fund And we are going to use the Mansa X Special Fund because it is the most popular today, performing very well. And I want to say that a special fund is a customized or structured investment fund that may combine different classes of asset to deliver higher returns than traditional funds. So asset classes include, in other words, because it trades different currencies, it's able to bring a higher return than fixed deposit where you only earn interest. Although that is one of the classes where it invests. So it invests in classes such as fixed income, where you have regular income from loan. You have equities, that is shares from companies, whether it's local companies like Safaricom Equity, KCB, and other local companies, but as well as international companies. Special fund like Mansa X are known to trade assets of companies such as Facebook, Google, Tesla, and many other international companies that you know of. As long as they know that they can make money, they are ready to invest in any country, but majorly the stable economies and in any shares of companies that are performing well. Then there is what we call the ETFs, that is the exchange traded fund, such as indices and basket, which is a basket of investment that combines a number of assets. Like in Kenya, we have what we call the Nairobi Stock Exchange 20 NSE index, the 20 NXE index, which means it's an index that is a basket of a combination of different shares from Kenya, companies that are performing very well. So if you buy an NSE 20 index, basically you are buying a portion of Equity Bank, KCB Bank, you're buying Cooperative Bank, and other major companies that are performing well, that are ranked to be among the 20 Nairobi Stock Exchange traded funds. It can also include things like bonds. Then we also have what we call the currencies, and the most traded currencies, of course, includes the USD, the GBP, the US dollar, the Great Britain pounds, and the euros, and some other currencies. And of course, even the cryptocurrencies. Nowadays, though, Mansa X does not invest in cryptocurrencies because they have to protect the investors against extreme volatility that happens when you invest in cryptocurrencies. Then, special funds also invest in commodities, which includes basic goods or raw materials such as gold, coffee, oil, and natural resources. Anything that can make money, as long as they have the information that it can be traded, they invest in that particular class of asset. Basically, these are about 5 classes, but Mansa X, for instance, as a special fund, trades in about 10 classes of assets, and that is to diversify the risk exposure. So one thing you need to understand about special fund is that these funds are actively managed and often have a number of things. One of the features that they do have is that specific investment strategies or themes. Number 2 is that they have less liquidity than money market funds, that is the MMFs. I know MMF is more popular. We know about MMF maybe more than we know about special fund. There is also what you call the low moderate risk profile, depending on the asset mix. Low because they invest in fixed deposit, treasury, commercial papers, and call deposits. Those are very low risk. As a matter of fact, when you invest in bonds, they are so secure to an extent that unless the government collapses, you expect to receive back your money. And we talk about moderate risk because they're also going to invest in shares, and you know that shares may go up or may go down. They are going to invest in currencies. The prices of currencies may fluctuate upward or downward, and that is why we talk about the risk being from low to moderate. Then, why special fund? Why would I encourage or even advise anyone to invest in special fund? First of all, what is the purpose? The purpose is to generate superior returns to tapping into unique market opportunities. So if your purpose is to generate a higher return, then special fund is for you. And they are ideal for investors seeking higher returns and willing to lock in funds for at least 6 months. So I know people like to have this, they like to have their access to their money anytime, but of course there is a lock-in period of about 6 months that you need to be patient and wait for your money to at least reproduce or multiply within 6 months or something like that before you start withdrawing. Then the strategy is to find a consistent company with capital preservation strategy. We are saying this because we have seen that the risk is low to moderate. So for the moderate, it means there is an exposure of your capital that you're likely to lose some fund if the things don't go well. So what they do, like Mansa X, is diversification. They invest in about 200 different avenues of investment to ensure that if something happens to one or two or a number of asset classes where they have invested, they recoup that loss through other assets that they have invested in. That diversification guarantees that they can never lose. And it has actually been proven for the last 6 months, the Mansa Special Fund has never lost investors' money. As a matter of fact, they have never had a year when they did not give a return of above 15%. So something else that is necessary for you to understand, because if you really want to invest in something that you can have confidence and sleep knowing that you have not invested in a place where you can lose your money or in a pyramid scheme, is to understand whether they are regulated. And of course, special funds in Kenya are licensed by the CMA as multi-asset special fund. The CMA is the Capital Market Authority, but they're also regulated by other regulatories, like we shall see soon. First of all, let me give you a list of about 4 or 5 special funds that are popular in Kenya. And of course, the first one is the Standard Investment Mansa X Special Fund, which was launched in January 2019. That means so far they have had 5 financial reports and returns for the investors. The second one is what we call the FIDA Investment Bank. That is the FIB Oak Special Fund, which was launched in February 2024. That means this will be the second year of trading and performance in the market. We also have other funds that have been in existence for quite some time, like Dre Associates Limited, Special High Yield Fund, which focuses on Kenya and East African high yield securities only. So even though it is licensed by CMA as a multi-asset special fund, it does not trade beyond the East Africa. Then we have the CIC Asset Management, that is the CIC Global Special Fund, which trades pretty much like the first two, but it's not very popular for reasons I cannot even explain very well. And something else that is necessary for you to understand is the distinction between the money market fund and special fund. Initially I used to think that special fund is money market fund, and I was corrected and informed that actually special fund is not money market fund, and firms that do invest with special fund are not dealing with money market fund, though there are some aspects that are the same. As a matter of fact, special fund invest in everything that a money market fund can invest in, but on top of that, they invest with other opportunities abroad or across the nations, anywhere in the world. So money market fund is a savings basket where your money is invested in low risk, short-term financial instruments like the treasury bills, bank deposits, and corporate papers. And that is why when you go to the difference in the list that you can see that I have here, the table that you have here, when you look at the risk level, for the money market fund, the risk is very low or low, while for special fund, the risk is low to moderate. Why? The money market fund invests in treasury bills, bank deposits, and corporate papers. And most of the time, these treasury bills and bank deposits and corporate papers are low risk. They don't expose investors' money. But special fund goes ahead to not only invest in everything that the MMF invests in, but also in other external sources of revenues to maximize the return. That means a portion of their capital, a portion of the capital of the special fund earns this 8 to 10% per annum interest, but a bigger portion also earns returns of above 20% because they also invest in international markets. Another aspect that they differ in is the liquidity, where the MMF is highly liquid. Withdrawal at any time is allowed. If, for instance, you have invested with Centum, as an example of an MMF, you can withdraw your money anytime. But with the special fund, there is a lock-in period of 6 months, and liquidity is available only on Fridays. They allow you to withdraw on Fridays. Why? Because you say this is an active fund. Therefore, from Monday to Friday, they are actively involved in the market. They don't want to avail all the money idle so that people can withdraw. So they require you to withdraw around the weekends, Friday, maybe Saturday and Sunday. But beyond that, the money will be trading or engaged. Another aspect is the instruments invested in. A money market fund invests in short-term debt like treasury bills and commercial paper, while special fund is mixed currencies, commodities, bonds, and equities. And another aspect is capital protection, where with money market fund, capital protection is very high. There is very low chance of loss, very low chance of loss. Well, with special fund, it's high also because they invest in the same classes of assets that money market fund invest, but also moderate because there's some part of that capital is exposed to the international market. Anything can happen there, and therefore part of your money may be under exposure because it's subject to market performance. Then the investor profile. Usually you'll find that people who love to invest in the money market fund are those who we call the conservative, the safe players, people who don't want to lose anything or to risk. They would rather have their capital back than risk at any cost. And I think it's a good idea, especially if you're dealing with people who are retired. You don't want to risk even a coin. But with the special fund, there is the moderate to conservative investors seeking higher returns. Like we've said, that portion of that money is invested in very safe havens, but a portion of it is exposed to market forces. But basically, if you choose a good company, you are safe because it ensures that capital is preserved. So, so before you invest, it's good to have information about who is your fund manager. Who is your fund manager? Like the Mansa X, the fund manager is what you call the Standard Investment Bank. So Standard Investment Bank is not the same as the Standard Chartered Bank. It's a totally different bank that doesn't have a relationship with Standard Chartered Bank. And one thing you also need to know is that commercial banks are different from the investment banks. An investment bank is usually instituted for the purposes of growing investors' money, where a commercial bank does all the other services that you know about a bank. You can deposit your money, you can save there, you can withdraw your money, and all other services that commercial banks offer. But what you call the investment banks basically exist for the purposes of investment and multiplication of investors' money. So, what is the firm? I just wanted to give you a little information about the Standard Investment Bank, so that you can trust it and know that it's a reliable bank, which was established in 1995 as one of the Kenya's leading investment banks, and it is licensed by the Capital Market Authority. It is also a member of the Nairobi Stock Exchange, regulated also by CDSC, regulated by global and local institutions. So as you can see, there is a multiple of regulators because it's dealing with investment, and it also offers asset management, online trading, and advisory services on investment and so on, alternative investments and so on. And that is why I'm here today. We're talking about alternative investment, but mark you, I said I'm not employed by Mansa X, but whenever I recruit a person to join, I get a small commission. But that is not why I'm training. I'm training because I'm a consultant, and it's my desire as a teacher who has struggled with loans and lack of better avenues to invest. I want other colleagues and other people who are professionals in different areas to get these alternative investment opportunities to do so. Again, it is also trusted institutional and retail clients across Kenya, and and the region, which means we have institutional investors like banks. Sometimes we have the commercial banks have invested with Mansa X. There are some government entities and parastatals. Some circles invest their money here. So it is something that you can actually rely on. What is the key difference between an investment bank and a commercial bank? I want to break that down for you so that you may understand. Feature, like the main service of commercial banks is savings, loans, and accounts, while an investment bank, the main services is investment, trading, and asset growth. The goal of a commercial bank is to safely keep your money, whereas the goal of an investment bank is to grow wealth and investment. The regulators are commercial banks by CBK, investment bank by Capital Market Authority, NSC, CBK, and global regulators. And you may be wondering, why so many? Because, we are dealing with investors' money. We are dealing with people's money, and therefore there is need to have multiple regulators, considering also that these banks are going to invest in so many diverse industries. We have seen they invest in 10 asset classes, and in these 10 asset classes, we have about, like Mansa X trades 200 different commodities and products. 200. So that explains why they have many regulators. Example of commercial banks is all the banks you know about, like KCB, Equity Cooperative, NCBA, and so many others. But for investment bank, there are a number of them. We have SIB, that is the Standard Investment Bank. We have the FIDA Investment Bank. We have Genthis and Daya. We have Genthis, Genghis. We also have Daya and Blair, which are international companies that have some branches in Kenya. We have the KCB Capital and NCBA Investment Bank. But you see, NCBA Investment Bank and KCB Capital, those are affiliate companies of the commercial banks that have that name. We have KCB Commercial Bank, which has now an affiliate investment arm for its clients called the KCB Capital. Same with NCBA. So features of Mansa X as one of the products that I would really recommend people to invest in is that it has the following features. Number one is that it is a multi-asset strategy fund with access to both local and global markets. And we saw why they have a bigger return, because they have both local, which ensures and guarantees safety, and then global markets, which guarantees and optimizes the returns that they're likely to get. So uses long-term trading. It uses long and short trading. That is, it makes money when markets go up or down. Let me explain that, because it's not so easy. If you have never traded, you may not understand how it happens. This happens in a product we call the contract for difference. You can enter into a contract for difference, which is actually a prediction of the movement of certain assets. Let's say, for instance, you project that in the next 3 months, gold price will go down. So when you talk about long, going long means buy. You buy because you know that the gold price will go up, and when the price is where you project that it will be, you sell. So you get the difference. That is going long. Going short is where you sell the gold. You sell the gold right now. You do what? You buy the contract for difference, a CFD, contract for difference. If you know the price will go down, you short it right now, and then you hold it, and when the prices go down, you buy it back. And when you do that, you get the profit in between when you bought and when you have sold after the price has gone down. That is what you call shorting. So that means with good trading strategies, you will make money in the market whether the price is going up or down. There are products that you know that you're supposed to short, and there are others that you're supposed to go long. And if you do it well, you make money in either direction of the market movement. Then we have what we call the available. It's also available in Kenya shillings and USD accounts. That if you're not from Kenya, or you're in the US or UK and you want to invest your money in a currency that is not Kenya shillings, then you can get the USD account. We also have, they invest in 10 asset classes. It is managed by experts 24/7 with strong risk controls. Those are some special features of Mansa X, and very specific features is that it charges 0% initial fee. Like if you want to invest 1 million shillings today, you don't have to pay a coin or anything at all on top of your investment. And if you want your money back, you also get it without any redemption fee. The redemption fee is 0%. Then the minimum investment is 250,000 for Kenya shillings and $2,500 for those people who are investing in dollars. Minimum top up is Kenya shilling 100,000. That is, if you invest your first 250,000 and you want to do an increment, the minimum you can add is 100,000, and for the USD account is of course $1,000. Another feature that is very specific to Mansa X is 6-month lock-in period. That at least it's expected the moment you invest your money, you should allow it to grow or stay with them trading to trade for 6 months before withdrawal of either interest or the capital. But nowadays the firms are very lenient because they want to make the consumers and the customers very comfortable. You can withdraw your money at any time, but then there will be some penalties on the interest that you have earned. If, for instance, you withdraw your money before the end of 6 months, instead of getting all the return that you have made during that period of time, let's say maybe 3 months, you will get something less than what you have made. That is the charges, but not your capital is not touched. It's only the interest that you have earned that is actually affected. Then there's also what we call the 5% financial charges, services charge, which is prorated daily over 365 years. That means every time they are reporting that the return this year is 19%, they have already charged the 5% financial service charge. That means probably, not probably, but basically the return was 24%. They withdraw 5%. So the return on your investment for the clients, what you get is 19%. So again, if they, by any chance, they have a 25, they exceed the 25% hurdle rate. Hurdle rate means that the KCB, or rather Mansa X, targets to make 25% for the investors. Basically, they have not achieved that so far because they have been giving a return of 15 for a number of years, and then 17, 19. We have not seen a return of 25%. So that means the performance charge of 10% has not been charged so far, but it can be charged when, if and when the company is able to make more than 25% return. If, for instance, they give you 26%, they are going to charge you 10% of that performance charge. That is the extra from 25% and above, they're going to charge 10%. So for the last 5 years that we have full year financial records, the average return has been 17.73%. 17.73%. And before I go to the numbers, let me just give you a few details of how does special fund, and in that case, a good example is Mansa X, work. How do they work? How do they make their money? Or how do they pool their funds? So the fund pools money from investors. So investors are classified into three. There is what you call the retail investors or the individual investors. There is the joint investors, and there is also the corporate investors. You can open any account of the three, either as an individual or joint or corporate. And some of these corporate entities are local entities and foreign entities, and the institutional investor also invest there, like SACCOs and so on. So the moment they get this money, what do they trade in? So they trade in local markets. I have already explained that, in NSC stocks, treasury bonds, and ETFs. They also trade in global funds like currencies, gold, oil, tech stocks, Eurobonds, and so on. And they also trade in what you call the derivatives, like the indices, and short selling to maximize the return. I have explained that short selling is when you can you short something right now, like you buy it right now, or you sell it right now, you allow it to drop, and then you buy it back, and then you make the difference. That is short strategy. So the performance overview 2019 to 2024, this is qualitative, like I'm not giving you numbers, just explaining how they performed. From 2019 to 2020, there was stable launch phase market testing. That was before COVID. And then during 2020, you understand that Kenya was hit by COVID pandemic seriously, but the fund showed resilience during COVID era, delivering a positive return. In 2021 and 2022, as the economies were striving to recover, there was a strong growth amid global volatility. And then in 2023, double-digit net returns in both the KES and USD funds continued to be experienced. And in 2024, there was a continuation of smart performance above the MMF and inflation, the money market fund returns, as well as the inflation. And Mansa X special fund performance for Kenya shilling, now here quantitatively. I've explained it qualitatively. Now it is quantitatively. In 2019, the launch year, the return was 19.1%. And the number of approximate customers who were there was just about a few hundreds of them, with the asset under management being about 3.1 billion by the end of 2020. 2020, the return was 18.75%, but the asset under management doubled, more than doubled actually, from 3.1 billion to 6.6 billion. In 2021, the return was 15.45, In 2022, the return was 15.59. Those are the 2 years when the return was minimum, actually, with 15 point something. And irrespective, the asset under management from 2021 to 2022 also doubled from 6.6 to 12.4. And it has continued to grow to an extent that in 2023, the asset was 22 billion, the asset under management, and the return was 18%. 2024, we saw the asset grow to 39.5 billion. And as we speak right now, the asset under management for Mansa X is more than 60 billion. As you can see in quarter two, it was 47.29 billion. That is the US, the Kenyan shilling currency alone. And as you can see, by the way, before I go to the next slide about the USD currency, in 2024, the return was the highest with 19.53. But the performance for this year, 2025, shows that this year might even be better, because quarter one, the return was 4.89%, and in quarter two, it was 6%. That means already for the first 2 quarters, the first half of the year, we have recorded a return of 10.89%. If you annualize that, that is about 21.9%. 21.9%. That would be higher than the return we have posted in the previous years. So for the dollar fund for Mansa X, it came in later. 2019, 2021, 2021, it did not trade. But in 2022, about 3.7 million USD was invested. But the fund has grown. As you can see, for USD, the return is usually lower than Kenya shilling, 12.1, 12.1, 12.50. And in quarter one, the return was about 3.14, which means the annualized return may be 12.56, which will be more than the previous years. And for those people probably wondering, why is it the USD currency is lower? The truth of the matter is, if you invest in US, there's nowhere in US where you can get a return similar to what you're posting here in Kenya for Mansa X. I have people in the US who tells me that the best return they can get is about 3% per year. Sometimes some banks will give you even 0.5% for 6 months. That is about 1%. So this is a very high return for people who are in diaspora and who are looking for a place to invest such funds. So as we continue, let me just give you a scenario, a case in point where, for instance, you invested, let's say you invested with Mansa X, an investment of 1 million shilling, Kenya shilling, in the year 2020. How would that look like today? How would that look like today? In 2020, the return was 18.75%. So that means the amount that you earned was 187,000 as a return for that particular year. So by the end of the year, you have 1,187,500,000. So in 2021, your starting balance will be 1,187,500. The return was 15.45. So the return amount is 183,469. As you can see, the interest that you earn in the first year is now part of your capital. So you are earning what you call the compounded interest. So by the end of the second year, you already have 1,370,969,000. And if you go on all the way up to the fourth or fifth year, the fourth year, 2024, the return was 19.53. The starting balance will be 1,869,000. And by the end of the year, you'll be having a return of over 2,235,000. That means your money has more than doubled. By 2025, quarter two, when we posted a return of 6%, your money will have moved from 1 million shillings starting balance in 2020 to 2,485,000. And if you do an analysis of that, you realize that that is a return of 148%. 148% in 5 years. Compounded annual growth rate is about 19.9% over 5.5 years. But what I want you to also note is that it takes exactly 4 years and 4 months to double your money. So less than 5 years, you double your money. Think of it like this. If you had invested your money in let's say real estate, how long does it take for you to recover back your investment? By experience, I have realized that it takes 20 to 30 years to recover back your money, and sometimes even longer than that in real estate. But as you can see here, it takes just about 4 years for you to recover back your money, your investment. So that means if I have 100 million, instead of putting it in real estate, I would rather put it in a special fund, and probably I can use the returns to build the real estate afterwards, after a number of years. Then if you look at the fund growth, I have already explained it, that it started from around 3.1 billion, but today we are looking at almost over $50 billion. And the average return since inception has been about 17.7% per annum for Kenya shilling, and 12.1% for the USD dominated currency. So finally, as I come to a conclusion of this training, who are the investors at Mansa X? They are the retail investors from as low as 250,000. There's diaspora Kenyans and professional business people and retirees, people who have retired and are looking to get a return that is higher than other avenues of money or rather investment. Then there is what we call there is the corporate treasuries and circles looking for better returns than MMF or fixed deposit. You know, in the past, circles have been investing in MMF and commercial papers, but now there is a better return, so they can invest in special fund. So instead of you investing your money in a circle and then the circle investing it in a special fund, why don't you do it for yourself and earn all the money anyway? And then special fund is backed by substantial institutional capital from sectors, from credible sectors, e.g. the corporation, institution, government-linked entities. While client names aren't public, the presence of government, institutional, and corporate capital reinforces trust and longevity. If you find a place where, for instance, a firm like KRA is investing, or other government entities that have surplus cash, like even the county government, then you know this is a credible place. This is a place you want to invest at. So now, the final thing is, how do you open a Mansa X account? You open an account with SIB. To get free support, you can contact me. That is my number. I'm one of the what you call the independent financial advisor. I'm not paid by Mansa X or Oaks to do this training, but because my work is consulting, I take it upon myself to bring information that can be helpful to people like yourself watching this. And for that, I have the privilege of advising you and also helping you to open an account. So if you'd like to open an account with Mansa X where you can deposit, you can contact me. I'm not going to be to like handle your money in any way. My work is to just facilitate you open an account, and of course I get a small commission, very little, about 0.5% from the Mansa X or Oak Special Fund, not from you. So basically you don't get any deduction for your fund because you have used me as your agent or as your financial advisor. So you can also open that account in Kenya shilling or USD, and you can start investing from Kenya shilling 250,000 or USD 2,500. And you can track the performance if you so wish. You'll be getting regular reports, and soon they are coming up with an online portal. And you can also withdraw your money at any time. Liquidity is available every Friday, and more importantly, after the lock-in period of 6 months. So basically, that is it for Special Fund today. And for any further information that you like to get or contact, you can email me at pminer2008@gmail.com or contact me via the number that you see on the screen. So thank you very much for staying tuned and even listening to us. I want to remind you that I work for Ropita Consulting Inc. as a director and also the lead consultant. I'm also a business consultant and trainer. I do capacity building training. I am a coach. If you need a coach to help you in performance and accountability, like you have some goals that you have set for yourself but you're not achieving them and you need an accountability partner, then I'm your guy. I'm the person you can talk to. I also do finance and accounting consultancy. very good at training in finance, and basically that is what I do. So thank you very much for being here. In the next phase of our training, we will look at practical examples of how you can also grow your money and still get a return from Mansa X if you do so, if you so wish. Like if for instance you are retired and you want to have like something like a salary at the end of every month, you can do so and also enjoy the benefit of your funds growing by investing in this special fund. It's really an amazing way of investing. Thank you very much. Until next time, see you.